The biggest employer in the US is the healthcare sector. The sector is responsible for 20% of all US GDP spending, and that number is only going to rise in the future. There's a lot of money to be made in healthcare and plenty of stocks we can invest in today to grow our wealth. And there's so many ways to make money in healthcare. This includes owning healthcare facilities and operators via REITs, biotech and big pharma actually producing the drugs, medical equipment, health insurance, pharmacies, they're all super profitable. A big perk to investing in healthcare stocks is they are recession resistant, as they are providing essential services. Ideally, most people are going to be going to the doctor under any market condition. Healthcare will always be in demand by people of any age, demographic, and people live much longer nowadays, so you're going to be seeing more old people wearing jackets in warm weather or counting the exact change while you're waiting in line. If we look at the year-to-date performance of the stock market, we can see tech has blown away the market out of the water, up nearly 40%. But wealth is not built just chasing trends once they've already gone up, buying during the lows and watching those investments grow when it's their season. Healthcare is up only around 1% this year, so plenty of stocks are at a discounted price. Let's rapid fire through some of the best in this sector, and I'll also show you a way to buy all of them in a single fund. Let's start off with a bang in the dividend king J&J, which has a starting yield of just under 3% and is trading well below its 52-week high of 183. Owning Johnson & Johnson is basically a healthcare ETF. It's heavily involved in consumer health, pharmaceuticals, and medical technology solutions. Their medtech segment alone has 12 brands with over $1 billion in sales. J&J has rewarded shareholders for over 100 years. Truly a dividend investor's dream with attractive and reliable dividends, growing cash flows. J&J should be bringing in around $100 billion in revenue this year. Johnson & Johnson shares are at a discount right now as J&J settles the talc baby powder lawsuits. It's not a super volatile stock. You know exactly what you're getting in a blue chip like this. This is just an example of even more sectors where they have billions of dollars of sales in pharmaceutical and consumer health and all the great brands that they have. Want some more growth options? Look no further than Intuitive Surgical, a company that makes advanced surgical systems that let surgeons perform minimally invasive surgery. Their most famous being the Da Vinci robot, a device which has been used in more than 12 million procedures since their launch in 1999. Instead of cutting open patients to access internal organs to be operated on, the invasive surgeries only require small incisions and super tiny instruments to get the job done. The Da Vinci robot aims for better outcomes, better patient experience, better care team experience, and overall lower total cost of care. Intuitive has tripled their revenues in the last 10 years, now up to $7 billion. ISRG shareholders have been rewarded, seeing the company go up 104% in the last 5 years, and now they have over $100 billion market cap. With more and more Da Vinci systems being installed globally in 69 nice different countries, I expect more exponential revenue growth. Let's take a look at a health insurer who probably pays for a lot of those intuitive surgeries. In United Health Group, this is the largest health insurer in the world, serving more than 75 million people worldwide. UNH makes a boatload of money when people pay for their health insurance premiums on a monthly basis, and it also has its Optum segment, which is its health services and technology segment. UNH made $333 billion in revenue last year. Its revenue growth just goes up and up every single year, often in the double digits. This is of course reflected in the share price, which is up 629% in the last 10 years, but also in that super juicy dividend. Sure, UNH may only have a starting yield of 1.65%, but it's rapidly grown that dividend in recent years. Their 5-year CAGR of their dividend is 17%. Imagine getting a 17% pay raise every year at work. And UNH only has a 30% payout ratio, so I expect so many more dividend raises in the future because this is a company that clearly shows year in and year out they can grow those cash flows from its business. Let's take a look at investing in healthcare real estate. Let's get a super juicy high starting yield of 9% with Omega Healthcare Investors. They provide financing and capital to the healthcare industry with a focus on nursing facilities and assisted living facilities in the United States and United Kingdom. They have 906 different properties with 66 different operators, altogether for $10 billion in total real estate investments. And by being an investor in Omega Healthcare, you also become an owner of that pie. Omega operates triple net leases, which means tenants pay for the maintenance and property taxes associated with the land, while Omega just sits back and collects rent. Now, it's not all sunshine and rainbows for Omega. They did struggle during the pandemic, which was actually dangerous for a lot of older people, and that led to more of them leaving nursing homes, hence less rent, and some tenants, they were not able to pay their rent. However, Omega never cut their dividend. They're still going strong, giving a juicy yield, while so many other REITs have cut their dividend during that same time. Now, Omega had to reshuffle some of their assets. That's why the stock price has been sluggish as of late. But investing in some of that risk and some of that uncertainty, that will be greatly rewarded with a juicy yield. Now, maybe you don't want to invest in a single stock. I don't blame you. Just investing in an ETF makes it super easy. Let's take a look at VHT. This is the Vanguard Healthcare Fund, operated by one of the best asset managers in the world in Vanguard. It has a super low expense ratio of just 10 basis points. With the VHT, you're getting a piece of 421 different companies in all of the money-making sectors of healthcare. We're talking about biotechnology, healthcare equipment, life science tools, healthcare management, and the biggest being pharmaceuticals. The top 10 holdings are some of the most established companies in the sector, and most of these pay dividends. At number 1 and 2, we have the already mentioned UNH and J&J, but then we also have great companies like Eli Lilly, Merck, AbbVie, Pfizer, Bristol Myers Squibb. These are all great blue chip companies that should all continue to grow their cash flows, and reward shareholders with profits. When these companies do well, so will you. This is 421 different companies that can all mention artificial intelligence in their shareholder presentation meetings, and then the stock price will just go parabolic. When these companies do well, so will you. ETFs save so much time, and they really make investing easy. Now, the yield on this fund is only about 1.36%, but in the past 10 years, they have returned 185% in capital appreciation. That's an 18.5% annual growth rate. That's a quick way to become an everyday millionaire. Alright guys, to conclude, the healthcare sector is looking really attractive at these prices right now. We know different sectors go up and down in different years, and I have a feeling that 2024 will be that rebound year. If you've enjoyed this video, be sure to help out a small-time YouTuber by hitting that like button. My videos are always found in podcast form under the Collect Cash podcast name. If you're buying anything on Amazon, be sure to hit my Amazon affiliate link right before you buy, and I get a small piece of that commission at no extra cost to you. Thank you to all the Patreons for making this channel possible, and I will buy, stash, and collect cash you on the next one.